Good afternoon. This is Brian Split with Allendale for your closing commentary for the week ending Friday, October 28th, 2011. And we did have some mixed trade today after a very euphoric day in the market yesterday, after the European leaders appeared to have come up with a plan to help solve the European debt crisis. But as far as settlements go today, we did have the December corn contract up 3.5 cents at 6.55. That is up 5 3/4 cents on the week, and 6.55 is also the high that we had on the WASDE report on October 12th. So the highest settlement for this move so far. On the December 12 contract, up 2 3/4 cents today at 6.16, and that is actually up 12 3/4 on the week. So some noted bear spreading in the corn market in a sideways range this week. On the soybean trade, November soybeans down 18 cents at settlement, and that's at 12.17, up 4 3/4 on the week, while the November 12 contract was down just 14.5 at 12.36.5, which is actually up 27 3/4 on the week. So again, very notable bear spreading in the soybean market. Wheat trade very mixed today as well. Inter-exchange spreading was also noted there. We had December Chicago wheat up a half a penny at 6.44.5. That is up 12.5 for the week. The December Kansas City contract was unchanged today at 7.38. That is up 15 on the week. And the December Minneapolis contract down 2.5 at 9.20.5. That's up a penny and a quarter on the week. But all in all, this is the fourth week in a row of higher corn settlements for the week. That's been driven by slow producer selling, some firm cash markets, and today especially some unwinding of the bean-corn spreads. The market is still well within an established range that we've been trading really for the past couple of weeks. The low end of the range maintaining support around 630, and the upper end of the range maintaining resistance at about 660. So this market is happy to navigate through that range at will, and it seems like it's doing it on an almost daily basis at this point. But as far as the soybean trade, we're also within a sideways range, and today we did have notable unwinding of spreads again in the bean corn and bean wheat spreads, and also in the old crop beans versus next year's beans as well, so some continued spreading there. But we've got some pressure from expectations for some deliveries on the November contract. Word is maybe 200 to 500 deliveries against that, with first notice being on Monday. And also talk of generally good plantings in South America are raising expectations for a good crop there. And as far as the wheat trade, the wheat's been really in a sideways range as well as the other grains, and at this point it just does not appear that anybody in the trade is willing to accept new positions here going through the weekend. And right now the main influence is Europe, and what we can expect is on Sunday night these markets are going to open up, and over the weekend you're going to have a lot of people trying to poke through all these rescue efforts that we've got, and what issues do we have, what are the shortcomings, what is good about it, and we're going to see some volatile trade again next week, no doubt about that. As far as the meat markets, we did have the hogs up in the extended Globex trade up 40 at 87.05 for December. February up 47 at 90.15. On the cattle trade, did end up lower on the day. October down 17 at 120.57. And December down 75 at 119.15. Now, we did have a little positive trade to end the week in the hog market after 7 straight sessions of lower settlements, and really that's been driven by a tumble in wholesale pork prices. So a lot of the traders have been looking for the seasonal break in this December contract, and it's been defying that for the past several weeks on talk of China buying pork, and it seems like this move is affirming this seasonal break that the trade's been waiting for. As far as cattle, we had some very disappointing cash cattle trade, confirmed cash trade at 120. We've heard talk of 118s, but that's disappointing because this market was looking for 122 plus here, so that led to the break in the cattle futures today. As far as outside market activity, pretty quiet overall after what we had in yesterday's, again, euphoric trade. But the Dow futures down about 8 points at 12,160. The S&P futures down about 3 1/4 at 1279 1/4. One thing worthy of note is the volume in the futures for the indexes about half of what the volume was yesterday. So very, very low volume today. Dollar index up about 20 points at 75.21 after being down over 100 points yesterday. A very big move yesterday. Crude oil down about 60 cents at 93.36. This is again almost $20 off of the lows we made early in the month for crude oil, and a gain of about $6 just this week. Gold unchanged right now in the electronic trade at about $17.47. That is up about $111 on the week. The silver market up about 11 cents at $35.22, up about $4 for the week at silver. And another very, very noteworthy market this week is the copper market, up about a penny today at 370, but up 48 for the week. And that is the biggest one-week rally since January of 1980 in that copper market. So again, very, very big recoveries in copper and crude oil, which could mean that the trade is looking for some positive demand industrially in the global markets here if we can get this situation in Europe straightened out. Once again, do want to remind you that we do have our annual conference coming up in January, the 20th and 21st, and we've already got about 70 attendees that have registered, and you got to get your spot saved. So give us a call at 1-800-2-MARKET. That's 1-800-262-7538. You can also register online at www.allendale-inc.com. And good luck trading to you next week. Thank you.